All right, after finishing the week last week on a down note, we had a nice little predictable short-term bounce today. The question is, again, how big of a just like we talked about last week, how big of a short-term bounce it would be. We knew there would be one coming. How big will it be? That will determine how likely we are just to keep going to the upside, just bounce up and keep going, a new leg higher, or continue the intermediate decline that we're seeing in some stock, quite a few stocks now, to the downside. So we're going to break that down in today's video, kind of what we're seeing, what we need to watch for the next couple of days to see, right? Because to see whether or not which one of those patterns is happening. I'll talk about which one I expect to happen based off of what we saw last week, and as well as some patterns I'll remind you of today. It is our last market outlook video of the week. I'll be gone the rest of the week and next week. So our next market outlook video won't be until 2 weeks from today. So come back on August the 5th, but there won't be a market outlook video over the next 2 weeks, as I'll be out in Africa picking up my son from his 2-year church mission. So we'll be back in August. So hopefully, cross our fingers that everything holds together. The market holds together while I'm gone. I gave you quite a bit to watch on Friday's video over the weekend to kind of get an idea of what to look for, and we kind of started to see that a little bit today, and I'll kind of follow up with that. But remember, Friday's video is a video you want to make sure you watch if you haven't already to be ready for these next couple of weeks. So with that said, let's go ahead and get started. Today is Monday, July 22nd, 2024. This is the Market Outlook from MarketScholars.com. My name is David Settle. Before we get going too far, I invite you to subscribe to our YouTube channel with this icon here, the red subscribe button down below. Click the thumbs up icon to like our video. Comment on anything that stood out to you today. Join our website at MarketScholars.com for free. Follow me on Twitter for more content between the videos, and join our Market Outlook Facebook group that we've created. If you're watching us on our blog, check out some of these other things over here on the right, including our Market Outlook live video, where I review old trades, put on today's trade already before the market closed. Come down to the bottom, click this heart. It opens up this tab. Hit that like button there. Same thing here. Click that thumbs up icon. It opens up this tab. Hit that like button. That pops up eventually on that one, and that will help get our content out. You can see right there. That will help get our content out to all of our followers on those platforms. So thank you to those who do this day in and day out. Those who don't, you can do it right now while you're watching with 1 or 2 really easy clicks. Help us get to 100 likes on Twitter. Here's our goal for the day. All right, let's go ahead and take a look at the S&P 500 with the market forecast indicators. You can see we rebounded today up 1% on the S&P, so up almost 60 points. Not surprising to see the intermediate line still down, and we didn't have that big of a rally. The intermediate line still down, market sentiment still falling, but they're still both at pretty decently high levels. So it's not like the intermediate line dropped this far over here, this point that I've shared with a lot of you as to like a potential analog to what we're getting right now. The intermediate line fell that far there too. And you can see other instances, if I were to go back a little bit longer, you could see other instances where the intermediate line also will come down a little bit and then turn back higher. We saw that in June of 2023, and you can see here in July of 2021. I mean, that when you get bull tags, that tends to happen. Here's another instance in March of 2021, and actually another instance there in December of 2021. So it happens. So it's not this just because it's below 80 doesn't mean that that we're all of a sudden we're not bullish anymore. We can still bounce off of this. We didn't technically get a bull tag, but you came within 1100ths of a point of getting one on Friday. So, technically we didn't get one, but theoretically we did. We had the same idea of what a bull tag is occurred in the past few days. And we bounced up. Short-term sentiment bounced up. It's great. Again, how the short-term sentiment bounces, coming off of first a bearish peak and then a bearish low, how it bounces matters. So it's still in bearish territory. So we're not out of the woods. One day didn't alter that. Tomorrow, again, assuming we don't tank down to Friday's lows, the near-term line will bounce out of 40. It will get up above 40 because that's where the momentum line is. It will follow the momentum line up, generally speaking, and we'll get, again, barring a big drop where the momentum line really tanks. But barring that, you'll probably get a jump on the near-term line to follow suit with where the momentum line is. Ideally, we get that momentum line all the way up here tomorrow. So the first day the near-term line's out from below 40, the momentum line's up in the upper reversal zone. If we get that kind of pattern tomorrow, I don't think that's likely, but it's very much a possibility. So if that's what we get, then there's a good chance that, like we saw earlier this year and like we saw in some of these other patterns, June of 2023, we go up for another leg higher, right? Because again, that means your momentum, it's not like this. Momentum line gets up, the near-term line follows, right? That would be the ideal scenario tomorrow. Get that momentum line higher and the near-term line follow. I don't think it's going to happen, again, because we've had a bearish near-term high point and a bearish near-term low. Like over here when we had that happen, we had a bullish near-term high followed by a relatively bearish low. That wasn't that bearish. Over here, when we got it earlier in the year, we had a bullish near-term high followed by a bearish near-term low and then back to a bullish high. So we only had one, and so like here, it's less likely because we've had a bearish peak followed by a bearish low. So we're already in the patterns. We already have lower near-term lows. Now, we're likely to get a lower near-term high as a result of this. And this is where the last near-term peak was. It was actually the highest high, the highest 52-week high, or the all-time high, closing high, and intraday high on the day that we formed a bearish near-term peak. So a little bit of a divergence pattern there too between these two lower highs and obviously higher highs in the index. And we're already below the low point in between them. So that pattern, that bearish near-term divergence pattern, is played out so far. So I think it's more likely the near-term line stops short. Maybe again, getting above 40. Now, granted, if we get a big down day tomorrow, it might just stay in bearish territory, and that's a possibility. You can see it can stay for a while. More than likely, it's going to continue this bounce and follow the momentum line. The question is what it does after that, right? If the momentum line gets above 80 tomorrow, then the day after, Wednesday, the near-term line will probably get up there too, and we don't have to worry about anything. But if the near-term line gets above 40 or gets to 50 and the momentum line ends up below it, again, like we saw last week, then there's a good chance we form a bearish near-term peak and we roll back down in the bearish territory. So something similar like Meta. Meta is a good example of that. We talked about this in our class today. Meta got that, right? The near-term line bounced out of bullish territory, or bearish territory yesterday, got up to 50.69, but the momentum line finished below it that day. And now the near-term line got up here great, but not in bullish territory. It's been 2 days. So again, not guaranteed that it'll be a bearish peak, but it's likely, coming off a bearish low, that ends up being a bearish peak because the momentum line's so low. So again, that doesn't guarantee anything, but that's the kind of pattern that if we get on Wednesday would increase the probabilities that we follow up with another bearish low, especially if we can't get above the intermediate line. Right? If the near-term line gets above the intermediate line, and by Wednesday, obviously it has to get above that to get above 80. We're golden, right? We're golden at that point. But if we form a bearish peak below it, then we're not so golden, right? The likelihood of us staying kind of like this. If we get this kind of peak on Wednesday, then we're likely to continue to the downside on an intermediate decline. This was a short one, but it doesn't matter, right? It doesn't matter the length. It just matters the depth, and the depth would be going right for about that 5% decline. Right now, we had gotten down to about almost a 3% decline on Friday. So that is the S&P. The NASDAQ looks obviously very similar, except the NASDAQ did actually get a bull tag. So if we are going to bounce up off of this, again, here's our first day. We're already above 40. The momentum line's above it. Great. We have to cross that intermediate line, get above 80, ideally by tomorrow. I would give it, it's Wednesday too because it's barely above 40. At the latest by Wednesday, but ideally by tomorrow. And ideally, we get above the bull tag high, which is pretty darn close to the gap low. So ideally, just get above that gap low. If we can get above those levels, these two highs, with the near-term line crossing the intermediate line, we'd be very golden. Again, I don't expect that to happen because, again, we're still below the moving average. We still got light pink shading in a pink line, and we're actually getting closer to dark pink shading here. So we'd have to have a really good day, like follow up on 1.5% day with like another 1.5% or maybe up to 2% day tomorrow to get us up above. So again, to kind of give you an idea, if we did another 1.5% day tomorrow, then we're looking at 2120. That would be above this high point at 20,080. Be barely above it, but it'd be above it, and that's kind of what we'd like to see. Follow up a 1.5% move today with another one tomorrow. Your Russell 2000 and your Dow Jones still have intermediate lines that are still in the reversal zones. Short-term sentiment looks very similar to the others, but we're still well above moving averages. The intermediate line's still up there. The Dow looks very similar. So we're actually still fine. The Dow, I remember it was a day behind the Russell. So this was the first day of the near-term line being below 60, and this is the second day, and it did get in a reversal zone. Fortunately, it didn't drop very far in the reversal zone. But the momentum line's still like 3 days now. So that's that I would categorize that as a bearish near-term low point. Again, coming off of a bullish high, it's not that big of a deal in and of itself. If we follow it up with a bearish peak, now we have a bearish low, a bearish peak. You get two of them. That's what you kind of need there. Let's take a look at the weekly chart for the S&P. We talked about last week's transition. It's not that big of a candle here. That's pretty much another transition candle. That's a good sign. If we can get multiple transition candles, sometimes that like this will lead to just a convergence pattern where we renew the move to the upside. So that's a really, really good sign from the markets if we can maintain that this week. And obviously, it's only Monday. The Nasdaq is not. That's not much of a bearish candle either. Very, very weak bearish candle. So if we're looking to avoid an intermediate decline, which obviously we're going to have one someday, but if we're looking to avoid it this week, we'd like to just delay it as much as possible. Then we're looking good, right? We're really looking good there. If you look at the Russell 2000, the weekly chart, again, it's a slightly higher Hakinyashi close, but a much lower high point. So we have a high hurdle to cross on that one. And then your Dow Jones Industrial Average, you can see it actually is a lower close. So we're setting up transitions in both of those indexes. So we're about a week behind if things do continue to roll to the downside. Let's take a look at the 3 green arrow chart. The NASDAQ 100, the NASDAQ 100 still has its 3 green arrows, or 3 red arrows, excuse me. It's the only one. The S&P has 2 red arrows, but not quite the third one yet. And then the Dow and the Russell don't even have 1 red arrow. Now the stochastics are pretty close on both, but still, you don't even have 1 red arrow yet on either one of those. So good sign there. From the 2-line perspective, we bounced off the 30-day. We got back above the 17-day, even though the stochastic or MACD is still well below its moving average. So again, at best, we're in convergence mode here. The Qs did not get back above its 17-day or 8-day for that matter. We're still below both. Remember, still below the 30-day too. The 8-day is below the 17-day, though they're still both above the 30. So that's kind of the next stage of weakness that we haven't experienced yet. MACD is negative, but barely. Stochastics is in bearish territory, but not in the reversal zone. So it's been bearish, obviously, but we're actually looking pretty good. The Dow and the Russell are still above their 8 days, so they haven't even and the MACD hasn't even crossed the moving average. So we're not even close to a convergence mode because, again, just how strongly bullish both of those moves have been. Let's look at some of the other oscillators. Your DMI on the S&P 500 actually looks pretty good. Like, you're still barely below 25 on the positive, and you're barely above 20 and already rolling over. Remember, it happens when we saw this here. So it happens a lot where the positive just barely drops below 25 and bounces, and even just a little bit below 20 and bounces, and the negative gets above 20 or maybe a smidgen above 25 and bounces back down. So that happens, and we're still set up for that to happen here, even in the Qs, right? We haven't dropped significantly. We haven't even got below 20 at all on the positive indicator yet. Has such a strong ADX there. Looking at the RSI and the CCI, still we haven't hit bearish levels. We bounced right back above 50 here, close to getting back above 60. Didn't breach the minus 100 level, so looking good there on the S&P 500. The NASDAQ was the one that looked a lot more bearish. It's back above minus 100 and back above 50. So dang, right? This is looking pretty good so far. Looking at your Ichimoku cloud, we are still above the cloud. We still have a strong trend. Remember, we have lost the trend on the Qs, so we're still below moving averages. The The green line's below the blue line, but again, we don't have a trend. But look, see, very similar, right? Now we have to get above both the green and the blue lines for it to play out for us. And then finally, looking at the Bollinger Bands on the S&P 500, we are back in the upper half of the bandwidth. Momentum is falling. The Qs, that momentum has now switched to the negative there, and you're still in the lower half despite the bounce. So it's been a nice bounce, but it's not been a like confirming bounce that like, oh, okay, get another 1.5% upside tomorrow, we're back, we're good to go. Unlikely in my opinion, but not so unlikely that we can completely dismiss it. I think it's a very strong possibility. I am expecting, based off the kind of move we talked for everything we talked about last week, I'm expecting this to form a bearish peak, a bearish near-term peak into the before we get to the end of the week where we start to move a little bit lower again. If you take a look at the intraday chart, you can see, you can see why we can't dismiss it because a lot of these patterns don't look so bad. Here's the gap. I would consider this a common gap, which is another reason why I don't expect us to continue this tomorrow. We did fill in some of the gap already, which makes it a common gap. We're barely in the upper half of the chart. It is a higher high and a higher low. We closed above yesterday's high, so that looks good from that perspective. But the fact that we filled in some of the gap already just makes it, and we barely got above yesterday's high, makes it unlikely that it will stay there, right? It will stay that way. So, and the Qs avoided the new 4-week low, but it's, the Qs, we're still in bearish territory. Like the S&P is not. We bounced out of bearish territory back into the upper half of the range, 4-week range. But the NASDAQ 100 is still in bearish territory pretty easily. So we're not out of the woods yet. I told you the range and the volumes are very low. That's the case, right? The range is now a lot higher than it was. It's not above 1% yet, and that's the kind of key mark to say, okay, we're in intermediate decline now. So far okay on that one. The NASDAQ, remember we did jump up above or almost above the 1.5% mark, but to a really high level. Today's range and trading range and volume are both really light. So when you look at the 3 green arrow chart here, you can see very low, below average volume, below average on the range. Again, not what you like to see. When we've been declining on above average volumes and ranges, we'd like to see at least the first couple of days, again, get some good moves to be above average. Above average. Even the Qs at 1.5% wasn't above the average, and the volume was. So, let's get a bigger day update tomorrow to really cement this, because if we continue to have low volume, low trading ranges, that's not going to work. The VIX obviously dropped down, almost always drops down on Monday. Excuse me, it bounces up on Monday. It actually gapped down today, but it really dropped down here. The VVIX though stayed up. So as much as the VIX dropped, the VVIX actually didn't drop very much at all. If you look at you can barely see it, but there's the VIX drop. VVIX drop much bigger. So again, it's kind of suggesting that maybe the VIX itself has dropped a little bit too much. You notice the VIX here, the VIX relative to its 200-day average is still easily above it, and still above the short-term averages too. So, again, we haven't changed that direction. One big down day only because we were so far above some of these short-term averages. Now let's see what ends up happening, and if we can follow through with another big down day like that, so like this, boom, 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 and get back below like boom, 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 then we know. If we only get one down day and we follow it up like this and follow it up with a couple smaller ones, then we have a chance to continue higher. Same thing that we saw kind of in this area. We have to get below these averages but to really come down. Otherwise, we're just going to continue this breakout move that we've had to the upside. All right, if we take a look now at what's driving this price action, let's come over here to the asset class comparison chart. You can see it was basically a return to the Mag 7. Again, an oversold technical bounce, essentially. If you take a look here, the Qs and IWM did actually really well too. The Qs were up 1.5%. They were the ones that were oversold. It didn't impact the overbought IWM, but it did impact bonds. Bonds actually, yields went up again today. The dollar was down. Commodities came up off their lows. Let me go back to the post-CPI result. So here's that post CPI result here, and it was actually, I guess it was the 11th. That was the post CPI result here. Yeah, it was the 11th. You can see IWM up 8, still up at 8.25. But going into today, you can see it was up 6.5%, and the Qs were down 5.5%. So that's why the Qs rebounded, right? They were clearly the laggard performer. And IWM, which was the big performer, still off its highs. Remember, at one point in time, it was up over 11% off that post CPI result. But and then again, even over here, still up 10% on last Thursday morning when it was up to the upside before faltering the rest of that day into Friday. And you can see real estate still holding up pretty well too. Bonds, which had been bullish post CPI, are now down. Well, I guess they're still flat, but they're definitely off their highs. And the dollar, which was down post CPI, is now been climbing slowly higher, and it's up to a relatively decent level. If you look at now let's take a look at the chart here. Let's look at the chart for the 10-year yield first. Pull this up. You can see a continued move to the upside. Again, you have 2 days, right, for the near-term line to get above 80, and it did. Right, the momentum line stayed above it on Friday, and then the near-term line got above 80 today. So it's not strongly above it, so it's not clearly a bullish near-term high. And the last few times the near-term line has gotten to the reversal zone, it's come right back down. So we'll see. We haven't had a period where it stayed above for quite a while here, but still relatively bullish considering how bearish we've been in all the clusters that we have been getting. If you look at the weekly version of this chart, you can see again we've been really flat. But now this is the first week that the near-term line is above 40. So as of right now, it's setting up for a potential bullish week. We'll see if it ends up crossing. It may be crossing the intermediate and market sentiment line if it were to get to the 80th percentile in the next 2 weeks. And we'll see if that ends up happening or not. Obviously, that would be really important. If the markets are going to stay bullish, we want to avoid that as much as we possibly can. Let's go to the moving averages here, and you can see TLT breaking back down below, holding resistance at the moving point of control still, and moving back below moving averages. You can see UUP kind of holding resistance so far at its moving at its point of control. So again, that would be a very good sign for the dollar, for the markets, if the dollar was able to hold resistance. And if the TLT ends up dropping more, that wouldn't necessarily be a good sign at all. So it's going to see which one wins, kind of that tug of war by the time it's all said and done. Commodities had dropped so much last week, had a little bit of a bounce up higher again because again they were so far down. Crude oil, the biggest component in that basket, holding its support so far at the 200-day average, and point of control just barely above $80 a barrel. The MACD and stochastics bearish. Again, that's the combination. That's the sweet combination. Falling crude oil prices, falling yields, falling dollar, right? If we can get that triple combination, that has generally led to very, very good risk appetite across the different asset classes. Obviously, the breadth started off the day relatively weak. Like we were still negative. We started off the day with the second negative day. We ended up finishing negative. We ended up finishing barely above 500. Like we were below 500 for a chunk, but barely below 500. But you can see how we're flirting with that level with the oscillator still pretty negative. And you're looking at the number of stocks above the 50-day moving average. Remember, 350 is a 70% level. Anything above 300 still is pretty bullish. So we're still okay from that perspective. And the number of stocks, the ratio chart is still above 1. But at least below its average. So if it can stay below its average and avoid a jump higher above it, again, that's bullish, right? We want it to stay bullish. Even if you cross up above 1, like we did last week, if you don't go too far above 1, that we can stay below the average, that's okay, like we saw over here. We had a few instances where we rallied above 1, but we stayed below the average and we stayed bullish for a few more weeks, right? And that's kind of what we're hoping here. Just stay bullish for a few more weeks so we can all be happy and we can just put off the pain until later. Here's the 200-day above its moving average. Very strong levels. 380 is that's why the number of stocks on the 50 is still below it. It's much better when the number of stocks above the 50 is above this number. And this is setting a pretty high bar for it to cross, because it's almost, I mean, we did hit 80% at the peak yesterday, and that's as you can see on my cursor, I follow it to the left. That's a very high level. Now, you know, it produced a convergence period here that ultimately led to a new leg higher. It produced a convergence period here that led to a new leg higher. So, you know, we'll see if that produces another convergence period here, where ultimately we bounce up the rest of this week, and this leads to a new leg higher. I think that's kind of what we're all hoping for there. Let's take a look at how the sectors performed. Again, that's where you can really see the oversold technical bounce. So we look at the sector comparison chart here, and then just go to let's go from the CPI report into today. So from July 11th on, we'll go to like a 15-minute chart. Again, going into today, XLK was down 7%, XLC was down 3%, and XLY was matching the market's decline on the S&P's decline. So they rallied today. So it's not surprising to see that they would be kind of our biggest winners on the day, because they were by far the biggest losers recently, and just a very short amount of time too going into today. XLC didn't really bounce up very much, but XLY and XLK were the only two sectors that outperformed S&P. Everything else kind of underperformed, including these other cyclical areas that are still screaming to the upside, right? On a relative basis, one day hasn't changed these trends, right? They're all screaming into the leading category, with XLK, despite, again, even with one day up to the upside, still screaming into the lagging category, and XLY starting to follow suit. XLC already there, and XLY following suit. Right? XLC has been there this whole time, last 5 days, and XLY 5 days ago was barely in the weakening, and now it's, you know, clearly into the lagging category. So big change. I mean, these are very, very loud moves over a short amount of time, and again, moving in the direction of sectors that are not highly correlated with the S&P. They're, in fact, are pretty highly negatively correlated with the stock market when they lead the way higher. Here's the Qs relative to IWM, right? This is the magic spot we want it to hold. We want to bounce off of here, and we can all be, you know, we can get everything to bounce up into this week. If this can bounce, if this breaks the 200, more than likely that means everything's falling, including IWM, just falling less. But it, you know, it would lead into weakness, and we see it. You know, as I mentioned before, there still is pretty strong weakness. A lot of dark pink shading on these top 12 companies that are in XLK and XLY and XLC. So a lot of, you know, strong bearish patterns. Even the, you know, everything else is light pink, except for Adobe, which, you know, is your strongest, but it had been the weakest going into its earnings announcement. You know, if you look back at its move, it's had quite the decline, right? So the rebound has been nice, but it's been only recent, right? It hasn't been, you know, it's been a lot. Let's see here, a lot smaller of a time frame that has been actually outperforming. So that's why I think it's still dark green shading and a green line there. Here we go. Because of that, because a lot of its weakness was pre-earnings, and earnings is coming up on a lot of these stocks, as we saw already with Netflix. Earnings is coming up on a lot of these stocks here over the next little bit, so that will help us either decide whether we bounce off of this, which we, you know, did a trade idea last week on Nvidia to kind of trade, you know, the bounce up, or over here AMD, it is an opportunity to take advantage of a move to the downside, right? So if we do keep going, this looks like to be the worst, one of the worst stocks that we can take advantage of to the downside. All right, well, that brings us to our trade idea of the day, and we want to take a look at Verizon. Let's take a look at Verizon here. If you see the intermediate line dropping, it's still in the reversal zone, but pretty bearish short-term sentiment and pretty bearish reaction to its earnings. You can see the earnings here coming out before the market opened today, and the market didn't like it. And so you can see the drop. If you look at the weekly chart, it's only one day, right? We have a lot more days. But you see we broke below the 10-week moving average. We broke below the 40-week moving average with a pretty bearish candle here to the downside. If you take a look at the three green arrow chart, so give me a second to bring that up here. We have 3 red arrows and a lot of volume, right? Big, obviously, earnings result, right? You're going to get a lot of volume there. We broke below a lot of moving averages. Point of control, which is very top heavy, which there's not a whole lot of volume below the 200-day moving average. We're still holding it so far, but the MACD has gone negative. The stochastics was already weakening. If you take a look at some of these other oscillators like the DMI, it's got a pretty bearish pattern, well above 30, the highest level on the negative that we've seen in a while. The positive indicator is not quite below 20 yet, so there's still not quite that bearish. If you look at RSI and the CCI, they both dropped to negative levels. The CCI dropped way down there. In fact, it's weekly turned back below 100 1 week after being above 100. So big change in sentiment on that. If you look at the Ichimoku cloud, you'll see that we are below the cloud. The cloud's pretty skinny to begin with, but we're below the cloud. Whatever weak bullish trend we had is now gone. The rate of change has gone negative to the downside. Then if you look at the Bollinger Bands and the Keltner channels, we've clearly broken below both the lower band here, and which from a pretty relatively low band width, and the lower Keltner channel with still positive momentum and red dots. So like we might just be getting started here on a downside move. So if you take a look at its options, I decided to sell, be a pretty relatively aggressive, sell the 37, buy the 39. That puts us down into, if you look at where that is fitting into its moving averages, 37 would be just a little bit below the 200-day moving average. Remember, there's not very much volume down there, so that's why I was willing to be a little aggressive on that. That gives us about a 3-to-1 reward to risk ratio. Not a whole lot of flexibility, so we might be out of this trade pretty early with a small loss if it doesn't, because of timing, right? It takes time. So if it works out below, great. If it doesn't, it starts to, we hold the 200-day for a while and the max gain starts to come out, then we'll take a small loss on that and not wait for it to get all the way to a $500 loss, just simply, again, because we ran out of time for it to make as big of a move as we needed it to make. All right, well, that does it for today. You've heard from me now. Now I want to hear from you. Use that link popping out in the top right corner of your screen that takes you to our Market Outlook forum. Open up any new thread with any questions or comments you have. Reply to anybody else's thread, and let's keep this conversation going in between videos. Again, thank you very much for watching. Remember, subscribe to our YouTube channel. Hit that thumbs up icon. Comment on the video. Join us at marketscholars.com for free. Follow and like us on Twitter and Facebook as well. Again, this is the last Market Outlook video for a couple weeks. I'll be back 2 weeks from today. 2 weeks from today, August the 5th, will be our next one. So anything that happens in between now and then, we'll talk about it when we get back. So have a great rest of your week, everybody, and a great week next week. Hopefully everything stays nice and calm and smooth. We can be able to digest everything, and then we'll pick up everything back 2 weeks from now. So have a great one, everyone, and we'll see you all next time.